Hey traders, happy Monday. Chris Pulver here with a weekly outlook. We're talking about stocks, Forex, cryptos of the week of February 24th through the 28th. Stock market's off to a pretty rough start, to say the least. Let's take a look at all things coronavirus. Headlines back in the news and driving fear. The VIX had a huge gap higher today. The stock market's had a huge gap lower. So certainly driving some risk-off trading and some sentiment. We'll take a look at the currency world as well as stocks. So let's get into it. Just a friendly reminder, I have some free education out there on YouTube, and links to those YouTube videos are on my social media channels. My best trading strategy, keep it seriously simple. We are working on Module 5 this week. Instagram, pulver.chris, Twitter, pulverchris, and just look up my name there on Facebook and YouTube. Again, those videos are free, so take a look. If you go to youtube.com, you just type in my name or find my channel. I post my weekly outlooks week to week on Mondays, as well as posting my best trading strategy, keep it seriously simple video series. All free education on things like support, resistance, trend lines, equity management, growth. We'll talk about choosing brokers, using indicators, trading with automation. All good stuff that will continue to come your way. Just subscribe to my channel, like the videos, get those notifications, and videos will be popping up each and every week. So let's get to the charts. Let's get to it. I want to take a look at the stock market really quickly. Here is the SPX, or the S&P 500. You can see that today's price action, a very strong gap to the downward side. Now, this does bring this into a pretty peculiar spot because now we're opening up a little bit of support. So if you take a look at this recent run from the dip back in December 2018, the melt up through several months here in 2019, this is May. We had bottoms in August, bottoms again in September, October, and then here we are with that last 11 to 12% run on the SPY. Now, very overbought conditions, lots of disagreement. I've talked about this for the last several weeks in my weekly outlook videos. I'm not surprised to see that this market technically is starting to fall. It needs a catalyst. What's the excuse right now? Coronavirus. Okay, we bring this into some support structure. We're now between my moving averages. Basically, just think of it this way. This is a faster moving average and a slower moving average. And if we move down into this zone, it actually is a healthy trend. All right, so even though it seems like we have to drop a ton, and it's probably going to drop a little bit further down or catch up into this support zone, this is still the buy the dip that I think a lot of money would be waiting for. So we're down from the highs last week about 4.8%. Now, there's been talk about an 8 to 10% correction before there's any real dip to buy. Obviously, in the face of the coronavirus and the face of risk-off trading, it gets a little bit gutsier to trade from this, this straight drop down. So if this does accelerate and we come down to this zone, look, we've seen bottoms and bottoms and bottoms, and they're V-bottoms. So I'm not telling traders or advising in any way, shape, or form that we just buy this, because clearly it can just drop and break this structure, and all of a sudden we give back a lot of what's been created over the last couple of years. However, if we have reversal signs, if we have aggressive trend lines, and we have a bullish candlestick formation, you can certainly entertain trading that move. And I do think that the coronavirus is just an excuse. I understand that it's a big deal. Here are some trackings on it, but take a look at the cases. Okay, for the first time that we've been tracking this, the cases are starting to level off. All right, now, yes, deaths continue to mount, but so too do the recoveries. So when I've been watching this, each week in my trading room, we're looking at, case numbers are starting to stagger off or start to plateau a little bit for now. Death tolls are continuing to slowly rise, but it's still a 1.5 to 2% death toll versus other major scares we've had throughout history, even the last 10 to 20 years. But the recoveries have grown a ton. We've seen 8 to 10,000, now all of a sudden 25,000. So it just shows that other than possibly elderly and children that already have a lot of vulnerabilities to respiratory illnesses, it is a recoverable disease, at least for now. So anyway, I'm just saying it seems like it's a healthy excuse for the market to drop. And so seeing this drop right now at 4.5%, if we get down a little bit deeper, if we drop into that 8 to 10% level, that brings us right into these moving averages with support. So from a technical trader standpoint, I will be looking for V bottoms here. All right, and that gets us also into the VIX discussion. The VIX had a big jump to the upside. Here is the volatility index. Look at this. We closed last week at around $17, and now we're up to 22. We gapped as high as 23, almost $24 today. So that leaves a massive gap that is likely going to fill. We had some, VIX highs. This is volatility index, also known as the fear gauge. It has some highs in 2018. That's when the stock market was at its lowest point 30% ago. So I'm certainly not suggesting that we can't have higher scares and the VIX can't run. All right, this is definitely helping my position that I have on inverse ETFs as we're seeing the stock markets decline. I'm trading a few inverse ETFs where as the stock markets are dropping, my inverse ETFs are rallying, and that's a good sign for me to make some hedge money, as well as trading VIX options. So, could we go higher? Sure. If it perpetuates this fall and we get into that 8 to 10% dip, the VIX will continue to rally. But this also leaves a gaping hole right there. And we've been coming all the way back down to these lows around $12, $13 for the last 2 years. So even if we spike a little bit higher, things start to go back to normal, we might fill this gap. If we end up coming back into this territory below, I'd say $18, then we're likely going to reset once again into the $12, $13, $14 level. So right now, I mean, first day of the week, everything kind of starts off with, it puts the markets on its heels on Monday. Now, the way I see this is, can the market fight back for the remainder of the week? I mean, just kind of a short-term, ugly start to the week, but can things kind of rationally lock themselves back up and we see the market come back and balance the VIX a little bit? Do we see the market come back and balance the gaps in the stock market today? I mean, we're getting some massive sell-offs, all right? But massive sell-offs also offer, you have to remember, technically it offers those chances to buy a dip. Because if you've been watching the stock market, how on earth do you buy the dip? Because there isn't one. I mean, look at this from August of last year. We had August lows of last year, September, October lows of last year, and we went up 12% without very little. I mean, in fact, 3% dips, 3% dips. Even this was a 3% correction. So the fact that we're now at, 4.5, 4.8%, that's fine. If anybody's looking to buy a dip, this is the dip to be buying. And I hope it doesn't accelerate and break structure, but if it does, I have ways to play that. But I have a feeling that we either might come down into this low. Again, this is automated trendline support. We have previous highs over here. I'm looking for something bullish to pop up, more than likely a V bottom. If we have some narrative from central banks coming this week or next week as we head into March and wrap up Q1, it's going to be really interesting to see how we close out this quarter. So speaking of news, let's take a look at the calendar for this week and see if we have anything pressing on high impact. Here is the economic calendar for the week. Earnings-wise, Monday, let's see here. Shake Shack, Intuit, HP. Tuesday, we have Salesforce, Virgin Galactic, Home Depot, Macy's. I'm just pointing out some notables. Smile Direct, Square, Etsy, Papa John's. Let's see, AB InBev for Budweiser, Workday, and Keurig. In the Forex world, we have retail sales for the Kiwi that came in as expected, 0.1%, 1%, slightly off. But again, you don't see the big miss or the big rally on that. Let's see, JPY Bank Holiday, we have Emperor's Birthday. Okay, happy birthday, Mr. Emperor. IFO Business Climate in Germany came in positive Monday morning. Euro had a nice little end-of-week recovery from 108.00. We hung around those lows at 107.90 for pretty much all of last week. Didn't do much of anything. And then Friday, when everyone wants it to be the weekend, the Euro just shot up about 50 to 60 pips. So we'll take a look at the Euro dollar. Dollar this week, consumer confidence. Again, more news out of New Zealand and Aussie. Business confidence for New Zealand, private capital expenditures for the Aussie, GDP numbers for the CAD on Friday, and Chinese manufacturing after hours on Friday night. So if you look back to last week, the week before, you go into this week. I mean, this is the end of the month for February. We trade through the 28th, and it's a leap year, so 29 is on Saturday. But this week is a fairly short week, and again, to end up a short month, but we still have all of March finished up the quarter, a very light economic calendar for this week. So, like I said, it will be interesting to see if these stock markets and sentiment kind of catches its breath and fights back for the week since we're starting off on such a hole to kick things off. But anyway, we will be watching. All right, it seems like today the market is destined for some big sell-offs. I mean, we're looking at 3.5% on the Nasdaq, almost 3% on the Dow, or I'm sorry, 3% on the S&P right now at 2.8, and over 3% on the Dow. So it seems to be blood in the water. We get the 4.5, 4.6% from the highs on the SPY right now, but it leaves a gap. It leaves the market something to go after if they want to. And my point is, if they want to save the structure, right? I mean, I look at this as, oh my gosh, it's selling off. Yeah, I know, but we sold off there for 3.5%, 4%, or 5 to 7%. There's another 5 to 7%. There's another 4 to 5%. And then after everything from October to the end of the year, it was 3.5%. Even this initial coronavirus scale was 3.5%. So we've had these tiny little dips, these tiny little breaths, where today is a little bit more accelerated. So I honestly hope it wants to come down a little bit lower and see if this previous resistance or these previous highs actually want to offer some support. And I don't think there's a lot to disrupt the stock market right now. but we will certainly find out. All right, so that's kind of my stance for this week. We'll approach it, tactfully as we always do, and we'll make sure that we're not getting in the way. We'll be looking at things like the sentiment strength line to see what our momentum is doing and where price is closing. So when it comes to pairs like the dollar yen, for example, let me type that in here. Okay, dollar yen. Our dollar yen had that ridiculous run last week. Let's go to the 8-hour chart. So this is our dollar yen. I was talking to traders about buying this above 110, looking for a breakout, and it was in my opinion, it was a stupid breakout. We wanted it. We wanted to be bullish on it. I was looking to buy anything above 110. And what do we have? This is a 15-minute chart, and this went just straight parabolic for an entire day. Now, this was Wednesday of last week. We broke through 110. We go up 170 pips for the day, and I missed my opportunity to get this dip right there. So as it was breaking out in session, I know that some traders bought it when we were talking about it at 110.50. They had a nice little run up towards 112, which we said was resistance. So obviously a great spot to be protecting those short-term gains, because what do? We ran into resistance. We filled this little gap, and from here, we are giving it all back. So as dumb as this move was to the upside, and as irrational as this move was the upside, look what price is doing now. It's coming back to balance, which is what the Forex market loves to do. And that makes me happy that it wasn't just something parabolic like, hey, let's chase the yen and be wild and crazy, because what's it doing? It's coming right back to where we started. So this does make things obviously a little shaky. We're coming back into this area or this area. Does structure come all the way back down and take out these lows, or is it going to continue to be back and forth? We have made higher lows in here. So even if we come back down to this zone and it gets really choppy, I'll still go back to watching range-bound tendencies and short-term breakouts on yen pairs. All right, I'm really not in the position to say what big directions we have on the yen. I did think that up above 110, we could certainly go to 112, and that was accomplished. But failing to get above 112, I was looking at 112 going to 114, but failing immediately at 112 means we're coming back right to these range-bound levels. So again, I will be pretty standoffish on yen pairs for this week, possibly some short-term opportunities. I know traders did a great job grabbing some pips there from 110.50 all the way to 111.50 or 112. I know traders sold it at 112 as well that made money on the way back down. So, excellent kind of aggressive short-term trading. It certainly paid out nicely, and then we'll wait and see if there's another big move ahead on some of these yen crosses. Let's take a look at the dollar index. A bit of a parabolic move on the dollar index on the daily chart. We shot straight up here with a bull flag, shot straight up again to retest these highs from 2019, and we are starting to fall back down. So that's a good sign for me. From the higher time frame, I was certainly expecting some bearishness on the US dollar, and we are starting to get that turn. Now, it's not entirely convincing yet. Let's take a look at our sentiment strength line. We've been patiently waiting for a U-turn. Okay, I'm trying to get it right here. This is an 8-hour chart, so 1, 2, 3 lines. By 5 p.m. Eastern time today, this could be a really solid U-turn or a reversal sign on the dollar index. So that is looking pretty good for some confirmation later today. If we go to the daily sentiment strength line, line, we have to come all the way back down to 112,400. So there's still a little bit of movement from the bears to the downside here, but what we can certainly look at is as the 8-hour is likely going to confirm by the end of the day, we come into our price action, and we want to see, does this just go straight down? All right, does this come back up at all and try to test these highs and fail, and then work its way back down so traders can sell nice and high, or we can look to buy those respective currency pairs like Aussie dollar, Euro dollar, pound dollar, dollar Swiss can turn to the downside, dollar CAD turns to the downside, dollar yen, I'm going to cross that one off the list, New Zealand dollar possibly a rally. So we're certainly watching intently with where this dollar is going to be and what type of confirmation I have. The easiest way for me to follow this, especially going into March and April and May, I want to do my best to just follow these directions. All right, these lines here, these sentiment strength line lines, I love watching these for just big confirmation, especially when it comes to an overstretched, overbought, oversold. I'm looking for U-turns to confirm. So if we turn red on the daily, this should be marking a nice reversal that ends up pushing the dollar down, at least to some corrective levels. Now, I'd love to see the dollar come all the way back down here, but in order to do that, we've got to score points for those bears. The bears have not scored any points really as of note over the last 2 years. So if this is a big U-turn that's going to kick and confirm, then we'll watch it and we'll trade it for sure. So that's the dollar. Let's look at oil. and gold and silver and some cryptos. So here is oil. Let's go to the daily chart. Oil's done a pretty nice job, U-turning at $50. We had highs back around 54 and change. Oil obviously getting a little bit of a hit right now, coming back in. This is raising some concerns with coronavirus. It's been hurting oil quite a bit. It really has been range bound, right? I mean, $50 support, you can see that since June of 2019. We're right back at it again. OPEC speaks up. OPEC gets vocal. Are they going to talk about production cuts? Probably. It is vulnerable to the downside. Of course, if we break below $50 and we break below these lows with closes below $49, then it's vulnerable to the downside towards 43. However, we haven't seen a range break here in almost 8 months. So I wouldn't be surprised if we still see some support right around that $50 zone. Traders, be careful, but we had a nice little short-term rally to the upside. It's just come back to retest. So I think there's still some upside provided that $50 support continues to hold. If we take a look at silver and gold, let's see here. XAU, that's gold, and big pushes to the upside. Finally breaking that high at 1606 during the holiday. This is a bit of a surprise. I really expected there to be more divergence on this. Divergence meaning that price making new highs but disagreeing with momentum. I thought that divergence would be strong enough that gold would end up coming back down a little bit. Now, it may still come back into this high from the holiday. This is December of 2019. If we fall into this zone but we stay supportive, then gold still looks pretty good to the upside. All right, now granted, this was a bit of an irrational move during the holiday break. This was a very brief pullback. So if we close back below this blue line, which is around 1600, I do think this is going to come back and balance out a little bit. So around 1550 or lower. But on its current trajectory, breaking this high with some daily confirmation, I think if there's a bull flag, I think anybody that's positioned long on commodities or long on silver and gold look pretty darn good. Gold to the upside looks fantastic. So if you're trading the actual instrument itself, great. If you're trading the ETFs or trading futures, great. I think futures looks pretty solid, or the bulls look pretty solid, very much in control on gold for right now. Like I said, the only way that's going to change my outlook is if we close back below 1600. Closing back below 1600 bring this back into play, because this could be that stronger divergence on a higher time frame. But trajectory-wise, I'd expect there to be a bull flag. A little bit of a pause right now, catch its breath, and then continue on, and we never see that test for a while. So the other option would be, if it's not a bull flag and it pulls back violently, let's make sure that the bulls hold that support and they want to push it up. Otherwise, 1600 is vulnerable to a correction to the downside. All right, that's gold. Let's go to silver. Typed it in incorrectly. There we go, silver. Silver, back up towards 1876 with highs in, this is September 2019, around $19 and change. I'm still hanging on to all my SLVs and all my other, kind of paper trading instruments for silver. I was using this chart as my instrument, buying it at 14 and 14.50, and I added several positions here. So this is all looking pretty solid to the upside. If silver hits, $19.50 to $20, I'm probably going to start protecting some profit. If we get back to these highs, I'll be up about 45% of my positions. So I will consider taking some profit in here between $19.50 and $20. And I'll be pretty happy with that. I mean, obviously it can continue to run, but we also might deal with some range-bound conditions where this resistance, we end up having some profit taking up here, and we end up coming back into either the midpoint, maybe even a reset to 14, where I'll just continue to buy lows, sell highs, buy lows, sell highs. I like the range-bound opportunity on silver for right now. Okay, let's take a look at cryptos before we get into currencies. So cryptos, we have Bitcoin sitting at 9,700. A little bit off the highs from 10 and change. We were up to $10,400 last week, and still looking bullish to me overall. Higher lows forming. Look and see if we have a little dip. This appears to be a nice little area for a minor correction, something like that perhaps. Little correction heading into trendline support. Let's see if we can find that trendline support around. Around current levels is fine. If it just consolidates, then we'll look at something to push it back up above 10,000 and see if that's another new high that forms. Other cryptos look pretty similar to that. Ethereum, this looks like a bull flag in the making right now. After having a nice little run, not breaking the highs, not breaking the lows, you have some consolidation. If we can break and score a point with those highs, we should be well on our way with Ethereum to head much, much higher. Litecoin, same thing. Litecoin, there was our corrective move. We have a nice little trend line bounce. We haven't taken out the highs yet, which is around 82.57. But interested to see if we can close above those highs once again. I do like that we're holding above that yearly pivot, though. That's a good thing. And then Ripple, some of the majors that I've been watching. Ripple's having a hard time. This one really doesn't look ready to correct, or at least bounce back to the upside. We're still in kind of a corrective phase for right now, hanging out around 27, and we're back below that yearly pivot. So I'm not saying this one's going to reset and go back down to 20 cents, but we want to see the other cryptos kind of lead the way, and if Ripple can follow suit, that'd be awesome. But I do want to see this one get back above 29 cents and hopefully start getting back up, inching back up towards that 34-cent high. All right, let's go into currencies. Aussie CAD. We'll start at the beginning, work our way through it. Aussie CAD, I was looking for a bit of a falling wedge. Still not out of the woods yet. 9,100 is way up here, 90.20. I'm looking to see, a lot of disagreement starting to form. We're not quite into oversold territories on this, but I do want to see if this recovers for the week back up towards something like previous lows. If this comes back to these levels, is it enough to break this rising wedge and get us into this pocket at 90.20 or 91.20? Still looking long in this one. Main levels I'm trying to get to, and again, with oil potentially sliding back down to $50, if we breach those lows and oil is vulnerable down to 43, this should be heading up towards 90.20 and 91.20. So it's really a tale of two commodities duking it out. One is vulnerable to China, that would be the Aussie, and one is vulnerable to oil. So both could be dealing with some headwinds here sooner than later, but from a technical standpoint, I still think the Aussie is better suited and better positioned for longs in strength, just based on where they are across the board. I have the Aussie basket actually looks really, really solid, like I said, technically for some strength. However, it is vulnerable to China. It is very susceptible to bad news and bad data and coronavirus scares. We haven't really seen the Aussie give us that risk-on type trading like we saw last week with the JPY being super weak. We've seen points where the Swiss has been weak, but we have not seen any real strength coming out of the Australian dollar or the New Zealand dollar. And part of that was because the US dollar remained very strong. So a fall on the US dollar does certainly help ignite the fuel for the Aussie strength and New Zealand strength. So I'm still long in Aussie CAD. I'm being patient on this, but 90.20, 91.20 are my target levels and my profit levels for that pair. Aussie Swiss, story remains the same. Talking about this one from historical lows. We came back down to retest these lows. I'm still watching to see how this plays out. We thought we had a nice little 4-hour bullish head and shoulders. We got to the neckline, started to come back in. You can see that it turns more into like a double bottom perhaps. But one thing I'm watching that I'm liking is if we test this low, which we're very close to it, if we test the low or even go slightly lower, there's still a lot of disagreement right there. Right now, we're not quite in oversold territory, but I'm watching to see how that divergence allows us to possibly, even if it's range-bound trading, we might deal with some more consolidation like so. At historical lows, by the way, before we get a bigger move to the upside. So I'm still holding tight on Aussie Swiss for right now, and just going to wait it out for a little bit. Aussie yen, like I said, with the dollar yen, I'm probably just going to sit on the sidelines here for yen pairs and just let them be wild and crazy and irrational. If you want to scalp it, good luck. We are heading back. It looks like we're heading back down for now. We have seen highs to lows, highs to lows, highs to lows. This one will probably, if there's enough acceleration behind it, come back into these lows around 72.60 or so. That also gets us back into these gaps around September, October of 2019. So would I jump in and chase the Aussie yen? No, I would not. I'm actually more curious to see if it offers this type of bottom again, or if we just want to stay and kind of keep the pressure on this. If the stock market sells off, then Aussie yen is vulnerable to these August lows of 2019. So there could still be some movement back into 70.50 or 770. I mean, that's a round number. So we'll see if the stock market continues to slide and Aussie yen breaks some of these major structures. If we break below 72.50, then we're looking towards probably 70.50 or lower. So it does give some more downside opportunity if you want to jump in and try to grab some short-term pips this week on the Aussie yen. Aussie New Zealand, 104.16. Structure-wise, we're seeming to hold pretty well. The Aussie versus the New Zealand is really just two really nice commodity-based technical pairs. So we'll see how this one it's going to take some time, but we might build some support there, build some support here. I'm still looking towards 107 and higher to stay bullish on the Aussie New Zealand, but it's going to take, like I said, some time. I'm really expecting this one to make a move somewhere in the end of March, early April. So I'm just willing to hang on those positions right now. Aussie dollar. Aussie dollar came back into some lows last week. Now, again, look at where the lows are in price. Look at our disagreement. We are not quite oversold yet. This is a relative strength index on the bottom. We're not quite oversold. However, if the dollar makes that topping pattern on the 8-hour sentiment strength line or even the daily sentiment strength line, we should start getting some bullishness to pop back up. So confirmation is not quite there. I can just show you here on the chart with the lines that I keep talking about. So here is the daily, and no U-turn as of yet. If we go to the 8-hour, no U-turn as of yet. So if we start seeing some green lines popping up, that's a bit more promising for a U-turn. The 8-hour is not that far away though. If you look at 1, 2, 3 lines, close above 66.12. Let's see, we get to 66.15. That's going to be enough to push this thing bullish. But I think at this juncture, especially with the higher time frames, and given the fact that we've had all of these red lines to the downside, I feel a little bit more confirmed that a daily change of color is what we need. And that daily change of color is going to require price to get back to 67 and change. So unless these lines start to get very, very, very small, and then we have one U-turn happening that's a little bit faster, it looks like 6,700 is really the big turn in my world. That's just the daily versus the 8-hour. So just a little difference in price action there. CAD Swiss. Traders took some profit right around that 7,400 to 7,420 zone. Great work, obviously, because we're dropping fast. And I kind of want to see this drop fast. I hope we come back into these lows. If we drop fast and furious back to these lows, I'll start buying again at 73, 72, 71, especially if we have some inefficiencies and pockets on the way down. So speaking of that, let's see if we do. On the 1-hour chart, nothing, right? I mean, even though this is declining, it's doing it in a fairly efficient manner. So we are just falling, and that's fine. But I'm still going to end up buying this at the same levels. We get down to these lows at 72.60, I'll buy. If we come down any lower, 7,200, 7,100, I'll buy. Long term, this is a big channel. So you can see my red arrows for resistance and my blue arrows for support. If we get down to these lows, I'm buying those dips. CAD Yen. CAD Yen, back up to the highs, rejection, lots of, kind of violent movement on the yen pairs over last week. This was that one wild day where all the yen pairs were going bananas. What do? We just came up here, scored a point, and dropped straight down. So it just seems like the yens are crazy. And they've been like that for a long time. They do drive me crazy. I love to trade them every now and then. But man, it's like chasing them. Sometimes you're just like catching water. They slip through your fingers. They move when you don't expect them to move. They move in ways you don't expect to move. And sometimes they never really offer you a good trade. Sometimes you have to chase and react to it. Sometimes you got to be, but again, that's what we take. I mean, if that's the opportunity, what's going to move 50 pips or 100 pips, then you got to jump on board sometimes. Otherwise, you can also save a lot of money and make a lot of money, but it is not trading them because they are tricky. So could this cut back down and just reset? Looks like it's already doing that. So resetting here from last week's little breakout, possibly coming back into previous lows. If there's any real structure here, there's a high, there's a low. So could we drop back into those lows and just be a range bound trade from highs to lows? Sure, that makes sense. So trying to make some sense of it, but that's about what I see right now. Swiss yen, this one is still ugly. So again, equal highs, falling off those equal highs, kind of new. It really looks like a new range for right now. I'll just take another horizontal line at the high. And it just seems like the same structure we had here. Now we have kind of a new high around 114 and a new breakout point around 112. So maybe a little range-bound trading still on the euro or the Swiss yen. Euro Aussie. This one's still kind of violent movement. We've been going pretty bullish on this one recently, but I think that's still headed into some resistance. So looking to get some equal highs to sell around 6,600. We put in a pending sell last week in the trading room around that 6,550 to 6,600 zone. So I'm looking to see if this just is, we had a great trade from here down. I know some traders went long, short term, made a few pips on the upside. That's great. We either have equal highs here, equal highs here. I am looking for selling opportunities back down to lows or back down to 6,000. So I'm still favoring, selling high and trying to see if we can get a push to the downside on this Euro Aussie. Euro CAD. Finally showing some signs of life to the upside. We're at 44.21. We talked about getting back into 44.50 or 44.80. Yeah, we might be looking at something bigger. I think if we get back, just for the sake of the trading room this week, keep an eye. Remember, 44.50 is where we got in. It was 44.57. If we get back to 44.57, I don't necessarily want to say, hey, let's just close it. But the reality is we let this go against us. I did not buy it on the right side of the trend line. And the reason why is I was looking for a chance to get a double bottom. Here's what I did. All right. Look, we broke the trend line over here. So when we broke the trend line, I looked at buying it right down here at the lows. It didn't get filled. So I didn't take that second position here. All right. I was actually looking at 4,200. So that was initially where I put in a pending buy at 42. We broke the trend line, so I put in a pending buy here at the lows. This is position 1. I was trying to get a position 2 filled. It didn't happen. So what I might end up doing is coming back to break even on that 44.57 trade. I might just close that trade for break even or better, and we'll go find another trade. If you did add anything on the right-hand side of the trend line, this is obviously in profit. You're going to be positive on the net position. So if you get to break even on trade 1 and then take profit on trade 2, that still adds up for a nice little win. So food for thought there. If anybody did buy the right side of the trend line, as we discussed, I just didn't get the equal low or that round number at 42 like I wanted. But this is moving nicely to the upside. It also is coming right back into a pocket at 44.60, 44.70. So if that level's hit, I might be able to walk out of here with 5 or 10 pips, call it good. If it surprises us with more upside, again, oil is kind of a catalyst here. If oil drops aggressively bearish, this will make a recovery. And heck, we don't know. We might get all the way up to 47. So depending on how violently it gets to this level, let me draw this again. If it gets back to this support, but it violently and aggressively goes right through it and closes, then we might just be looking at a recovery. So if it comes up and stalls, again, keep an eye on that break-even point. I might just get out of this trade with 5 or 10 pips if I can. If it goes up higher, I can still look for a flag or a little scalping opportunity to go to the upside. Okay, so that's one to watch for today, really, because it's going pretty aggressively to the upside for right now. The Euro Swiss. This one had an interesting move. I was looking at my prices earlier this morning, and we're below 6,000 or 1.06, and now we're at 106.15. So we dipped below. I mean, look at the low here on the 8-hour chart. We were lows around 105.90. I can't, from a technical picture, paint this one any cleaner than it is. We're on the right side of this trend line. We have oversold conditions. We have divergence. I mean, just get this, give us something, right? I mean, give us something more bullish to the upside. Give us some line breaks. Give us something. Here is the sentiment strength line on the daily. 20, it's almost like 30 lines in a row. It's like stupid how many lines this was. But I'm sitting here waiting to see, do we confirm a U-turn around 106.50? If we can put in some U-turns, put in some bullish confirmation, then I'm much more a believer that we can recover all the way back up towards 110 to 110.50. That's where I have my sights set for this year, at least, because that's a yearly pivot on the Euro Swiss. But confirmation is absolutely needed. One thing I'm also liking, we were in a couple of trades on the Euro Pound. It is heading higher. We should be in profit here on the Euro Pound. We got in around 80, what? 4 something, 84.70, and then 83.30. So we have one position in profit, one position that's not quite there. We should be above break even or very close to it right now. If it gets back up into 84.50, 84.70, I did talk to traders about being willing to cut that first trade off for a small loss and take profit on position 2. So this would be break even on 1 and then win on trade 2, still walk away with some profit on that Euro Pound. So it's doing what we want. We're holding low so far. Hopefully this will continue to head up towards 84.50 or higher. Euro Yen. Pretty wild and crazy stuff. Like I said, I'm just going to leave the yen pairs alone for right now. I'll watch the dollar yen and figure that one out. Euro New Zealand, still, we're stuck in a range. There's a lot of resistance up here. There's a lot of support down here. So we have some conflicting decisions on the Euro New Zealand. I think it's best to stay out of this one for right now, and we'll find another trade at a later point. Euro dollar, I know I had a lot of traders that were willing to buy the euro dollar at 108. They're certainly not regretting that because 108 finally had a nice little U-turn. We got down to around 107.80. Today's candle is actually pushing higher than last week. That was Friday's close. Really nice bullish close around 108.46. Currently, we're pushing higher than that. So I was reluctant to keep the trade at 108, but it's technically exactly what we thought, right? We expected it to come back and fill this French election gap from 2017. It did that, and what are you noticing? You're noticing that the bulls are starting to push. So it is a really good point, especially from this technical level. Resistance, support, resistance, support, resistance, support. It's just all in how it fell. It fell very violently, consecutive bearish candles. But here we are looking at a daily chart with, lows in price, breaking this aggressive trend line, nearly oversold, a little bit of divergence. It was just, you really just had to take a chance, right? 108, I'll buy it and give it a couple of days. Now you're up 50 pips looking to protect it. So if you did buy it at 108, move your stop to 108.05, move it to 108.10, and just hang on to it. Go to break even and see if this wants to run to 109 or 110 and recover. And enjoy a little bit of a scalp by just taking a nice buy low opportunity. Pound Aussie. Pound Aussie. Switch the time frame here. There we go. Pound Aussie is this. I think this is going to do exactly what we thought. We looked at resistance here, resistance here. Now, we did notice that prices were making slightly higher highs. I think there might be another stab at these highs. So this might just slowly work its way to these highs, and then we start looking for a trade back down to this trendline support, or better yet, as we break this trendline support and then fall. So if we get up, and that's why I put the round number here, 2,000. If we get to 2,000, that's a big round number resistance level. I think that's a good opportunity to look for some confirmation to sell Pound Aussie. Pound CAD, this one is pretty ugly. We had a break of the trend line last week, but the CAD is weak this morning. Oil sliding, so I'd say just stay out of the Pound CAD for right now. We'll try to make a better decision on this one. If it comes back into this area, maybe retest the backside of the trend line perhaps, and then we start to sell that. That does look pretty promising. But, I mean, if the CAD is not showing any signs of life, then I don't really want to force a trade that could be a weaker pound and a weaker CAD. So if this one sets up solid for us, we'll take the trade. Otherwise, we'll leave it alone. Pound Swiss. Pound Swiss heading lower. We expected this. This looks like a little bit of a retest of those previous highs. So right in here, previous highs, retesting, starting to come back in. I am looking for something like this. Structure-wise, if it's low and slow or just really low volatility into this yellow zone, that to me is a buy opportunity. I'm still looking at pending buys around 2,200 on Pound Swiss. I'm not going to do anything until it gets there. I mean, if it comes down to 2,200, I'll buy it. Otherwise, this back and forth choppiness for a few hundred pips here and there, I'm not going to scalp it or anything. I'll just wait. I want to buy it low. I want to sit in this position and see if this runs all the way back up towards 3,000 or higher. Let's see. Next is Pound Yen. Pound Yen, right up to resistance. Right up to resistance, perfectly at this level that we drew it in. This is resistance. If we had a chance to sell it, go to the smaller time frame. I mean, you can't get a better setup than that. So what do we have? We run right up to resistance. We break at the market open. We have a little bit of a flag over here. Flag right there. Sell it. If you sold it nice and high, I know I had some traders that talked about a test position around 144.50, 144.60. You are certainly getting paid on that right now. So great work on that. And where are we coming? Well, looks like we have resistance down here. We have support down here. If I was selling it at the highs, my stop would be in. My stop would be in close to price and trailing because there was virtually no risk on the trade. You put a trade in at 144.50, or if you even got in over here, it's like there's very little risk on the trade because it was right there. And now you're in profit. Now you're in a surplus, moving your stop into cover your risk and enjoy that little surplus of profit. So if it runs and the market's generous, hopefully it trails and you can make more money. But great trade selling at highs. Pound New Zealand, this one's going to be range bound, maybe even retesting those highs at 204.50. So we got up to 205.10. Let's take a look at this one. Look at the daily chart. Right here. We talked about 204.50, 205.100 looking for a sell opportunity. You can see that this one is still, again, this may be a rising wedge right here. This could be a little grind and then a bigger break to the downside coming. I'm looking for confirmation on this one. If we spend some time still chopping around here, I'm not going to jump in and sell it. Okay, I want to see if this can break and go lower. I want to see if this can U-turn on the trend line and then give us a nice little run back into equal lows at 198 or lower. So I do like this one. I just didn't want to put in the sell trades on levels that, for a currency pair that can certainly go 200 to 300 pips in a single day. If we're wrong on that, then we're not confirmed. We're just not confirmed yet. That's my point. A confirmation for me is get up here, get up here, get up here. Have this be a really nice rising wedge, and then I'm looking for a sell opportunity. get that confirmation, turn on a system that's going to sell it ahead of time on a smaller time frame and confirm that move to the downside. But we're not there yet. We're still, very choppy here on the pound New Zealand. Pound dollar. We took a nice little scalp last week on the pound dollar for about 90 pips. We sold it on the backside of this retest at 3,000. We hit 29.51. We sold that live during class and the low at 28.50. So we ended up taking, we had 100 pips of opportunity. I think I ended up closing for close to 90 on that trade, which I'm not complaining about at all because you can see here this one's really not moving much. So it's oscillating a lot between 2,900 and 3,000. I think that's a pretty tough zone to trade. So I'm still favoring some downside on this one, but if we have a weaker pound and a weaker dollar, then this one's really not going to move. I still expect this one to come down to the lows around 28 or 27.50, but I'm very curious if we get into these areas, if that is a bigger buy zone waiting to happen. But the dollar has to be a cooperative part in that, and so far we really haven't seen that major turn on the dollar yet. Okay, a few more to get through here. New Zealand CAD. Nice little push to the upside today. So far, bullish price action day is looking pretty solid. But we need to break this blue trend line and see if this pattern is going to hold. It's a very deep, at this point, deep right shoulder. More confirmation needed on the right side of this blue trend line. If we can break it, then we're still looking to push up the channel resistance. But there's still a lot of work ahead on the New Zealand CAD. But I remain bullish on that one. New Zealand Swiss, same thing. We should have been filled, or I hope we were filled. Let me check the lows. Price today, let me just hover over this. Low at 61.77. We had a buy trade at 6,200. So yes, we were filled. Okay, so we should have been filled right here at the lows around 6,200. And again, right side of the trend line, we're not necessarily registering oversold on the relative strength. We do have some nice disagreement though that I like. So if we have disagreement and disagreement, if we need to come back down to the oversold conditions, fine. But I'm hoping this right side of the trend line gives us the conviction to move bullish. So again, I can look for my sentiment strength line to turn. We probably haven't done that yet either. So I'm definitely in some of these trades a little bit early. This U-turn would be fantastic, and I would welcome it at any time. We have levels all the way back towards 65.50 to 6600 that I'm looking to see if we can get some profit at. But I do remain long on New Zealand Swiss. New Zealand Yen, this one is very much range bound. Take a look in the candlesticks. So we sold off here. It's been sideways within about 100 pips. So lows around 70, highs around 71, and that's it for now. If this breaks, now this could be a little breakout opportunity. Be careful on this, but another scalping opportunity. If we break below this range, high to low consolidation, if we break below this range, we could follow through. There's points to be scored down here. There's points to be scored down here. That could be a scalping opportunity from sub 70 down towards 67. That's not bad. That's 300 pips. Okay, so there could be some decent scalping on both Aussie yen and New Zealand yen. I would probably look to something like Right Trader to trade those. Something like this, where it's nice and smooth to the downside. Here would be something like a 30-minute chart. Actually, before you get into the 30-minute chart, we need to make sure that we break those previous lows. So this would be the box that I'd be watching right here. If we can break those lows, what I want to see is we're already going to be in the sell zone. I understand that. But we have turns, turns, turns. If it turns again, I'm not selling. What I want to see is that price is coming down here, rejecting here, and then going. And that's the next chunk of profit that I'm going to go after. So it's going to take price confirmation below this breakout point, and then we're looking for a retest and then a sell. And so it would be something, and we're trying to sell this on a retest of 70, but we're looking to fail at 70. And then see if we can take this down for a few hundred pips. So that would be one that we keep an eye out for this week, especially if this selling and this risk off accelerates. New Zealand dollar. New Zealand dollar. Again, right side of the trend line needs to happen. This is still a nice bullish pattern. It's a deep right shoulder. Can we carve out some lows? Can the dollar turn for us? If so, this should break this blue trend line. Still waiting to see if this one does. And again, what am I watching for? Does it get into oversold territory? Do we see disagreement on price and momentum? It's not quite there yet, but more movement on the right side of the trend line is needed. And I think there's a lot of upside potential here. We just need that confirmation. Dollar CAD. Dollar CAD. So we have pending sells at the highs around 33.20. And we had a high today. It looks like today's high spike. Let me see if I can get this one live. Just hover over it. Today's high is around 33.06. So still looking for rejections around these highs at 33.20. Just break the trend line, come back, retest the highs, and then fall back down towards 3,000. It's a nice range opportunity on dollar CAD. Dollar Swiss, I had this one set up for a buy trade. I did actually took some profit on this last week, and I'm glad I did. So trade 1, trade 2, trade 3, took some profit right here at the yearly pivot, and I said previous support becomes resistance. So I'm glad I took some profit on 3 positions. This is now coming back down. If it comes back down, fine. I'm not going to do anything as it falls. I don't really like to sell this currency pair. I want to buy this currency pair. So where am I going to buy it? Here. Equal lows. Where am I going to buy it? If it goes lower, equal lows. I'm just going to buy this one at big levels and just wait. There's still a really nice pocket way up here at 1.00. All right. But in order to get that trade, I might have to wait and just buy low, and it might be range bound. I buy low, and then we have the big reversal to 1.00. The dollar does need to fall, period. All right. So I'm not rushing into this currency pair. I just want to see, does it fall to nice levels that I can buy from and hang on to it. So dollar Swiss, I'll wait, but I'm happy I took some profit where I did around 98.40. Dollar yen, big breakout from 110 to 112, all in one day, which was pretty wild. Breakout there, there's 1 day of pushing. You got that follow through on, I believe it was Thursday. So that was Wednesday's breakout, Thursday's follow through, and then Friday to today completely reset the entire move. So what are we doing? We're really just trading these bigger ranges. So we still have respected resistance at 112. We might come all the way back in to reset this move entirely. We might come all the way back down here into 109, 108. I still think that 10800 brings in the downside. I still think that above 110 brings the upside. I mean, we're at 110.42. So this week, unless we get a severe bounce at 110, I think if we close back below 110, this is most likely heading back down to retest this low, and start to give 108 a run for its money. Now, like I said, we've had higher lows here. We've had some channeling here. This was a bit of an extreme from last week. So that definitely threw off some technicals if traders are trying to follow range structure. But we could come right back into this level, have some support, go back up, have some resistance, come back down. And this might be what we have to deal with. That's not going to be a pleasant trading environment unless we're looking to scalp on smaller time frames, trying to position ourselves from buying low and selling high. That's going to be a lot of effort to trade one currency pair. So what I would rather see is this. If we close below 110, there's probably scalping opportunities back down to these 108.50, 10800 levels. So we may look at a scalping opportunity on that this week. All right? If we close below 108, I'm a seller down to 105. The only other option I really see here this week is if we stop in its tracks at 110 and we bounce back up. But unless there's just a swift recovery in the stock market and the VIX nosedives from this big gap higher, I mean, it has to be a complete reversal from today's tone. Today's tone is very risk off. So if there's a complete reversal of that, then sure, maybe we have some movement to the upside. But I would say right now, below 110, sliding to close below 110, we're probably going to start pushing even lower into 108.50 or 10800. All right, let's take a look at a few exotic pairs. Dollar peso, big move finally. You haven't seen a big move on the peso like this in months. And then we have, a 4,000 or 5,000 pip move to the upside. So it came out of, I'm not going to say nowhere because we expected this to be bullish, but there's a nice 6,000 pip move, 6,500 pips in the last 3 days. The dollar krone, which we were waiting to see, what can we do here with the dollar krone? This is structured I am watching really closely. I think the dollar krone looks really solid from a break here. If we break below this blue channel, I'd like to see if this can range back down for about 4,000 or 5,000 pips to the downside. Okay, euro krone, same thing. If we get a better setup, I think dollar krone is actually a better trade technically than the euro krone right now. Euro krone, I would continue to look for these sell highs. Sell high, sell high, sell high. Something like that on the euro krone. If it does pop back up to retest, 10.25, 10.28, something like that looks like a good opportunity to sell. All right, and then we also talked about one other exotic pair, the South African rand. And this one is a big range. So we have resistance at 15.4. We have support around 13.23. This is like a 15,000 to 20,000 pip range. So it pays different. The margin's higher, but it's still a great technical trade. If it's up to the highs around 15.4, I'm looking to sell it, looking to confirm that move and see how low this wants to go. Score point for those bears, or hit support even lower. But we should be able to, should hopefully go after 10 to 15,000 pips on that move. So it could be a lot of fun. A little confirmation is needed. A little sentiment strength line U-turn is needed. So if we get those things lining up like we did there or there, then we can sell it. All right, so between the daily and the 8-hour, we're looking at those a couple of those exotic pairs. All right, traders, that's it. That's been a pretty lengthy weekly outlook, so I know that took longer than usual, but thanks for watching. Again, if you have any questions, let me know. You can reach out to me on social media. You can find me out there, Instagram, Twitter, Facebook, and YouTube. Keep those likes and comments coming in on my YouTube channel. I'll keep the videos coming and keep the good content for education coming your way. So have a great day and have a great week, traders. See you soon. Bye.